Good morning, Steve Freed in Chicago with the morning grain comments. Well, happy Thursday, and the sun is shining here in Chicago. Overnight, we've got grain prices lower, some follow-through selling from yesterday's USDA, what is considered neutral report, and also some concern about navigation on the Mississippi and Memphis, where there is a bridge that they had to close because of some cracks. We are hearing, though, that navigation under the bridge by barges could resume as soon as today, but it'll take a long time to fix this bridge, and any movement or anything like that could collapse the bridge into the river. So we have to kind of watch that pretty closely. A little bit of concern, especially in corn, about the Chinese export program and whether we could get corn to the boats to send them to China. But as far as the USDA numbers are concerned, for 21 and 22, they pretty much gave everybody what the average trade guess was. The only difference was in the corn by not raising exports as much as the trade thinks and lowering the carryout. It's interesting that if you take the USDA numbers and add 500 million bushels to next year's corn demand and 100 million bushels to the bean demand, which the market feels is possible, you would have a carryout of 1 billion bushels in corn and 40 million bushels in beans. I think the USDA is hoping that over the next 30 to 60 days, we'll see higher acres and mostly normal weather across the U.S. So that increase in supply could offset the fact that they're not putting demand as high as it could be. Globally, the USDA increased world corn production outside the United States for 21-22, wheat production outside the United States for 21-22, and South American soybean production. But still, it's the nearby market that is tight here in the U.S. for corn and beans, and the weather is still going to play a key factor in this 21-22 U.S. supply and demand. We're still looking for mostly dry conditions in the Canada prairies and North Dakota this summer. The jet stream right now is dropping pretty deep into the Midwest, not allowing for a lot of rain across the central Midwest. Today, over the next 7 days, you're going to see most of the rains in Kansas, Oklahoma, Texas, Missouri, and Arkansas. But eventually, I think the weather experts feel that jet stream will move north and allow for at least the eastern Corn Belt and parts of the eastern part of the western Corn Belt to see normal rainfall. The key is, if this ridge develops in the Dakotas, will it expand into western Minnesota, parts of Iowa, and Nebraska? And that'll be key, because we need the 180 corn yield and 52 or 51 bean yield that USDA put out yesterday. Outside markets, all negative, worry about inflation. The dollar's about the only thing that's higher on my screen, and so we'll have to see if the inflation data is just temporary, or if it's something that long-term the Fed is going to have to deal with as far as interest rates and accommodation. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.